Alrighty, what is up? What is up? What is up? What is up? theAPEcoach from Six Pack Gaming here, and today we are starting a brand new series on the channel. I'm super pumped about it. I'm excited because this is something I've gotten into the past I don't know, this past year really, and it's become a big passion of mine. We are going to be talking about crypto trading for beginners. All right, so I've got a whole series of videos lined up. We're gonna make this a regular series on the channel, and if you guys are looking at this here, you're probably looking at this like, what the heck is going on here? What is all this? It just looks like a mess, right? And believe me, I understand. I was where you were. And so the whole goal of this series is going to be to take you through all the fundamentals. We're going to talk about candlesticks. We're going to do support and resistance. We're going to do trend lines. We're going to cover a whole bunch of stuff, all the fundamentals, to make sure that you can be profitable trading. Anyone can be profitable trading as long as they have the proper, proper knowledge of the fundamentals, a risk management plan, and some effective strategies, right, that have been proven to be profitable over time. So we're going to start with the basics of everything today. We are going to talk about candlesticks. Okay, so what we're looking at here, we've got a bunch of indicators and stuff like that, but if we turn some of that off, what we're looking at here is a bunch of Japanese candlesticks. Okay, you've probably seen this before. This is how charts look, right? Whether you're in stocks, whether you're in crypto, whether you're in Forex. So these tell you basically what direction the price is moving, right? This gives you an overview, a visual representation of kind of how the market is feeling, if the price is trending upwards or downwards, etc. And we can use this in technical analysis to find good entries. Now you can see some of these. This was a trade I took earlier today, 2.57%. It hit my take profit. It was on 100x leverage, so I actually got 257%. So that was a solid trade. This was another winner late last night. This one was only 74%, but I saw that it was kind of a bad trade that I got into, so I got out once I saw that I was getting profit, and I actually ended up catching it right at the reversal point. So that was a solid little scalp. This was another winning trade where I shorted, but just to show you that, it can be profitable when you have the strategies in place. But forget about all this for now. What we're going to talk about are candles. All right, so I'm going to try to make this as easy as possible for you. Let me get the color out here. So there's two different colors of candles, right? We have a green candle. Oh yeah, look at this drawing. Okay, we have a green candle and we have a red candle. Okay, I don't know what I'm doing here. All right, so a green candle means that the price is going up. There's more people buying than selling. A red candle means that there's more people selling than buying. And now the size of these candles and the candlestick patterns that we run into give you a better idea of what direction the price is moving, and either what direction the price is going to continue to move, or if it's going to reverse, or if it's likely to reverse. Obviously no one can predict exactly what's going to happen, but these give you a very good indication. Now there's a couple important things to note about these candles. Okay, so what you have here, this whole portion in the middle here, this is called the body. Wow, great writing. Body. And then this is the wick. Okay, just like a candlestick, right? Just like a regular candle. Wick. Man, I cannot write here. All right, so you have the body and the wick. Now, why are these important? We will go over that. Okay, so basically, whenever you have a green candle, the bottom of it here, let me erase some of this so it's a little bit easier to see. Okay, so we had the body and the wick. I should make this eraser bigger, right? But I think you guys understand that, right? A basic candle, there's a body and there's a wick of a candle. Now, when the candle is green, the open of the candle will start right down here at the bottom. Why am I in a super thin pencil now? Sorry, chat. I am a noob when it comes to using paint, apparently. Is this a brush? There we go. That's better. So the open is at the bottom and the close is at the top. So this means that the price, or this candle, started at the bottom here, and then throughout this time period, it worked its way all the way up here and closed at the top. All right. And now each one of these candles, each one of these bodies represents a certain period of time on the charts. So if we go back and look at the chart here, when you're on the 15-minute, which is what we have here, each one of these candles represents 15 minutes of time. So you can see in this little 15-minute period, there was a big climb up. So the candle opened right down here at 3,015. It came down a little bit. So that's that wick, right? And then it worked its way all the way up here and then closed right up here at 3,085 right at the end of this. Oh, this is fantastic. Look at that. This was a potential trade I was going to enter. I didn't actually enter this, but it looks like it's playing out. Anyways, so you can see this is what happens in one 15-minute period. Now, if we go into the 5-minute, this shows you what happened during those 15 minutes. Okay, so it wasn't just one straight shoot up. There was this, and then there was a second 5-minute candle and a third 5-minute candle that brought it all the way up to that 3085 level, and then it kind of lost some steam and it started coming back. So the difference between the body and the wicks of the candles, the body is, it'll show you where the price opened and where the price closed. The wicks show you where the price moved to during that time period. Okay, so if this was a 15-minute candle, that means that during this 15 minutes, the price came down to here at one point, but then it worked its way all the way back up, worked its way right up to the top of this wick, and then by the end of the 15 minutes, it finished right here, okay, right at the top of that candle. So let's try to get rid of some of these drawings, make it a little cleaner for you guys. So the close is at the top and the open is at the bottom when it's green. When it's red, it's the opposite. Okay, so if it's red, it's going to open at the top here. This is your open. Holy. And I swear I can write better when I'm not using a mouse. This is the close. Okay, so the exact same thing like we talked about with the open on the green, the close on the open and close on the green. The exact same thing opens on the red, except it starts up here. It would have worked its way up to here at some point. Then the price would have came all the way back down to here at the very bottom of this wick. But then by the close of this, again, if this is a 15-minute candle, by the end of that 15-minute period, it will have closed right here at the bottom. Okay, so that is giving you a basic understanding of what candlesticks are. Now we can use that because you know how the green and the red candles work. This would be called a bullish candle. This would be a bearish, right? And bullish just means there's more buyers than sellers. Bearish, there's more sellers than buyers. Okay, so now that we have that, we can look at some patterns, okay, to kind of understand what these things mean. Because yeah, okay, there's a bunch of red and green, you know, candles on a chart. How does that tell me, you know, what's going on in the market, and how can I use that to earn some profits, make some good trades? So that is where these candlestick patterns come into play. There's a whole lot of patterns that, you know, you could look into, but there's only a few that I would say are really worth paying attention to. A lot of these things I don't really, you know, they're not really beneficial to me, at least. So one of them is going to be the hammer. So this shows that there was a lot of movement downwards, right? So the price came from up here. There was a couple red candles in a row, so the price was dropping. It came all the way down here, but then there was a ton of buying pressure, and it brought the price all the way back up and closed at the top. So they didn't let that price continue to drop. You know, the bulls or the buyers forced the price all the way back up, and then you see it reversed and started heading back up. So that is a bullish candlestick pattern. That just means it is likely that the price is going to go up. When you see that, this is a similar situation. This is an inverse hammer. And the reason that this is still bullish is because it finished green, right? So you had these red candles driving the price down. This continued to go down a little bit, but then the buyers came in. They shot the price all the way up. The sellers kept trying to push them down, but the buyers kept the candle green, and we had some bullish momentum here, and then it continued up. Okay, so those are some that are somewhat effective, but what I really like to use and look for is candles like these bullish engulfing candles. So if you have, you know, this little small red candle, and you see that the wicks are pretty even on each side, and it's, you know, it's not a big body, that means that the price didn't move much, right? The size of the body of the candle represents how much that price moved during that time period. So if the body of the candle is really short or really small, that means that the price didn't move much, so there wasn't as much momentum going in that direction, right? So this one was pretty break even. This is more of a spinning top, and then we had this massive green candle right after that. The body of this candle fully engulfs that red candle before it and closes up above. That is generally a very good sign that the price is going to continue up off of that, because it got a lot of momentum. Okay, and so these are sort of the three bullish candlestick patterns that I would say to kind of pay attention to. There's one more. Okay, so these three, there's one other one that is on this other pattern here. I'll see if I can zoom in on it a little bit for you. Where is it? Here, the 3-line strike. Okay, so this is another fantastic one. Technically, this is a bullish engulfing candle as well, but when you have 3 reds in a row here that are a bit smaller, and then you have this giant bullish engulfing green candle, that is a very strong signal that the price is going to start going up. So that is one that I like to look for. So those 4 would be the ones that I would pay attention to the most. The hammers, technically 3, you know, the hammers, the bullish engulfing, and the 3-line strike. Those are the ones that I use the most often. And then here is bearish candlestick patterns. These are very much the same, but in the reverse, right? So we're looking for reasons for the price to start dropping and going down. So we have the hangman. Okay, so this is very similar to the hammer, but you'll notice that it's red, right? So we had the green candles building it up, and then we had the price continue up a little bit, but then the sellers came in, they forced the price all the way back down. The bulls tried to push the price back up, the buyers, but the candle ended up closing red, so it showed that there was more momentum to push the price down than there was to keep pushing it up. And then you can see the red candles followed after that. Very similar situation to the, you know, the inverse hammer here. This is the shooting star. So again, you got the green coming up, then you have the sellers pushing that price all the way back down. The price went all the way up here, and then sellers just came in and they said, no, this is too high, we're gonna force it down. So then they sold, and the price started coming back down. Likewise to the bullish engulfing, there's a bearish engulfing. So this red candle fully embodies, and more than embodies, it engulfs the green candle, right? So it's much bigger. So this just shows that there's way more momentum to push the price down than there was to push it up here. And so it's likely that the price is going to continue down. And just like there's a 3-line strike to show bullish momentum, there is a 3-line strike to show bearish as well, although I don't know if it's on this chart. But essentially what you would be looking for is 3 green candles here. This is kind of an example of it here. So you have 3 candles, green candles coming up here, and then you have this big red bearish engulfing candle after all 3 of these. And if that red candle engulfs all 3 of those in the 3-line strike, then that is just insane momentum to the downside, and you can be comfortable assuming that the price is going to continue down. Okay, so I don't want to, go too in depth here. I want to give you guys some time to sort of process this. You can just Google these, right? You can Google candlestick patterns and take a look at the different patterns here. But like I said, I wouldn't really worry about, all the different patterns, because you'll probably find 100 out there. I would pay attention to the bullish engulfing, the hammers, and the 3-line strikes. Okay, and then just to go over this one more time, just to give you an idea of the time frame thing, to clarify that a little bit. Let me pull the charts back up again. So let's look at, this is the daily chart. Let me see if I can find like a clean one here that I haven't marked up. Okay, so this is the daily chart. So every single one of these candles represents what happened to their price throughout that entire day. Okay, so if we look at yesterday, this had a huge rise up in price. This is a giant bullish engulfing candle, so it's likely that the price is going to continue up. Right now it is red, right? But because of all this momentum driving the price up, it's likely that it's going to continue up to whatever the next resistance zone is, and that is going to be the next thing that we'll cover. But to show you guys this, you can break this down. So this 24-hour candle, you can break this down into 4-hour candles, and so then this shows you what happened in those 4-hour periods throughout that day. So you can see there was one 4-hour green candle, another green, another green, another green, and it just built all day long, right? And then you can break that down even further. You can go into the hourly. So this tells you everything that happened every hour of that day. So that's where you start to see a little bit more fluctuation, right? It's not just all straight up in one line. The price moved up, came back down, moved up, came back down, moved up, and that's kind of how the price action typically moves. You're gonna see it move in waves, kind of like a staircase, and we'll get into why that happens and how to know, how to be able to determine where the price is likely to get to, and all of that stuff in later videos. And again, you can kind of break it down into 15-minute, 5-minute. I would say anything below 5 minutes, not even worth looking at. You're gonna be trading against bots, and you might think you have fast reaction times or something, but you're probably not gonna beat out a computer algorithm. So I would say 5 minutes is the lowest that you would want to go, and the time frame that you're looking at will basically depend on how often you want to be placing trades. So if you're someone that wants to hold a trade for like 3 days, you're going to be looking more at like a 4-hour chart, and you're going to be doing your technical analysis on this and trying to find an entry point here, and then you're going to be holding that for maybe the next day, maybe the next 2 or 3 days, depending on how well that price moves. If you're trying to get a trade, maybe once a day or once every other day, the hourly is going to be the chart that you're looking at. What I tend to use the most is going to be the 15-minute and the 5-minute. This is where you want to make sure that you're getting at least 1 trade per day, potentially 2 or 3, depending on how the price action is moving and when you can find a setup. But we won't, I won't overload you with too much stuff. We'll just do a quick little recap here. So we talked about candles. Okay, there's a green candle and a red candle. This is bullish. and this is bearish. With a green candle, the candle opens up at the bottom and closes at the top. The wicks of the candle show you where the extreme limits of the price action moved to during that time period, but the body shows you where the price closed. And then again, the bigger the body of that candle, the more momentum that price had in that direction, right? So if this was a big green candle, it shows you that there's a ton of people buying and pushing the price up. If this was a big red candle, it shows you that there's a ton of people selling and pushing the price down. Okay. And then what else was I going to mention? There was one other thing. The bodies, the open, the close. Oh, right. And then based on, the bodies of the candles next to them, if there's a really small red candle here and then this giant green candle, that is a good sign that the price is going to continue up in this direction. Okay, so that is charting 101 candlesticks. I hope you guys took some value from that. I hope you guys learned something. If you guys like this video, be sure to like the video. Make sure you subscribe. We cover fitness for gamers, play to earn NFT games, and now in the APEcoach Crypto Corner, we're going to be talking about crypto trading for beginners. We're going to be going through a whole series on the channel teaching you everything you need to know to be a successful and profitable trader in crypto. We're going to keep covering the best NFT play to earn crypto games and keep showing you guys how to level up your health and fitness. All right. So there is a couple other things I forgot to mention. We do have some links down below. If you happen to be from Canada, be sure to check the link down below. You can earn yourself $30 for free just for signing up with my link for VirgoCX. This is an awesome Canadian exchange, and it has a ton of different cryptocurrencies. So pretty much everything you'd want to get yourself into, especially starting out. So definitely check out that link. If you happen to be in a different part of the world, we do have a link for ByBit here. This is another fantastic exchange. This is one I'm likely going to be moving to exclusively very soon. And we have a link for Binance as well. This is what I have been using up to this point. However, being in Ontario, I think that is going to be ending the end of this year, so we only have a couple more months that we can use this. So I think I might get ahead of it and move things over to ByBit. Lots of great things that I've seen about this exchange and heard, and I've checked it out a little bit myself as well, and it looks fantastic. So I'm excited to start using this. We've got a referral down in the link for this as well, and this one has a really cool program. You actually earn not only do you get a $20 reward just for signing up, that's like the base reward, there's bonus rewards based on your trading volume that you get, like a random card with it said up to $500 that you can use in your account. So some awesome stuff with these exchanges. So be sure to use those links if you're thinking about getting started. And don't worry if you have questions about where do you set up your accounts? How do you set up your accounts? We are going to be going over that as well. If you like this, be sure to drop that thumbs up. Leave me any comments or questions you may have. Feel free to join us in the Discord as well. We do have a free Discord server for all of the Six Pack Gaming fam here. So we've got, our fitness content. You can look for parties. We have our crypto corner, where I've shared some trades, things like that. This one was a nice one the other day, 212%. But be sure to join up. We got the link down in the description. Thank you guys so much for tuning in. As always, until next time, train hard, game hard, and we will see you in the next one. Have a great night. Have a great evening, everyone. Peace out.